Hello, everyone, and welcome to the weekly market chat here with myself. I'm your host, Greta Wall, and David Prince, the leader of TV Live's Inner Circle virtual trading floor. Hi, David. Thanks so much for joining me for this today.
Thank you for having me.
All right, so our topics today range from inflation to big tech stocks to all kinds of different things. Well, apologies, I have to
say hello back.
So let's just go ahead and get started with today's slides so we can talk about all of these different topics with David. All right, so trading after the CPI live with David Prince. So just a reminder for everyone, the January CPI did come out Tuesday morning and hotter than expected. The headline number was hotter than expected on both monthly and annual basis. Core number also hotter than expected on a monthly and an annual basis. Before the CPI came out, the S&P 500 was on a record-breaking climb. Monday, the index closed above 5,021 points and then dropped below 5,000 by the close on Tuesday. So it was a big pullback for the market, of course, after that hotter-than-expected data. Rebounding some today, but not back yet above that 5,000 mark. Oops. So, David, let's just talk before we get into what you've been doing mostly this week. Let's talk about your expectations heading into the CPI, how you approached this, and then how you navigated it after the data came out yesterday morning.
So I actually thought we'd come in like literally in line. I didn't think we'd be hot, and I didn't think it'd be soft enough to miss the number to the downside. I really thought we'd come in line. That was my gut. The way we played it is, as I've often said, regarding earnings, where we are pre the print, in this case pre-CPI, was where I was most focused. Just thinking, how much of a chase will we have if we're just meet the numbers, right? Mm-hmm. If inflation is slowing, but really not slowing enough. And I thought that might present some downside, let alone if it's a hot number. So we came in with a lot of positions, but positions we own much lower. Some shorts on like Nvidia. I had some puts. I had some Q puts, which in a way were a hedge if things were hot, and then held core positions. My thought was that if we came in line, there was downside, that we've really come a long way. We had to miss. We had to really miss to the downside, show inflation cooling a great deal to have any significant upside. So I was really prepared more for downside. I wouldn't say I thought it was going to be a hot number and Dow down 500, but I was ready for the Nas to be down 100, 200 and have a cooling off period. So, and the way we played that was, it ended up being an offensive play, but I saw a turn in Nvidia the day before. So I came in with Nvidia puts, 710s, and we came in with 429 Q puts. So it ended up being a really nice open for us. But I was not risk off, but I was concerned that a lot was built in. So I was, let's say, more conservative than many I see out on the street in terms of chasing IWM and over 200 and new highs coming. I was more, let's see how the number pans out. And that was how I played it.
And now looking at the Fed futures market is, of course, the March cut is completely off the table. I mean, it already was, but definitely off the table now after this week's data. And pushing back, it looks like to July is when the market is really starting to price in that first cut for the Fed. Where do you fall on when you think the Fed might start that easing cycle?
I think it's probably midsummer, and I think the market's ahead of itself. But I think we now know, like, he really turned out to be a pretty darn good Fed chairman. After some mistakes along the way, saying transitory and all that, but he knows what he's doing. So my point is, if we see a significant drop off in jobs, right, or we see real estate start to really fall, I think he'll adjust. But right now, I think it's fair to say the guy is truly data dependent, and the data says March, like, he'd be out of his mind, and there's a good chance that we have at best 3, maybe even 2. Rate cuts. It's going to be about data. We are a data dependent, thus far healthy economy. My thought is the economy starts to really contract more, but so far it's not. Sorry, worst allergies today. It's not happening. So I think we have a data dependent Fed chairman and Fed, and 2 to 3 and not till summertime, unless some data changes his mind. And I don't think he'll be against changing his mind. I think it's actually in his best interest. So it's really going to be about what the numbers come out and say.
All right. We do have more data still to come this week. Today is a quieter day, but tomorrow we'll get January retail sales, weekly jobless claims, the Empire State and the Philly Fed manufacturing indexes, and home builder sentiment all tomorrow. So it's a busy day. And then Friday, we'll get housing starts and building permits, the January PPI and the core PPI. PPI is really important for that
I think
forward-looking indicator.
All of that out. It's just PPI. That's really all that matters now. You can take all that stuff out. PPI is now more relevant than ever.
So saying that is more relevant than ever, is that because that is that forward-looking indicator to kind of get a gist of where consumer prices might be in the next month? It's
going to tell us if companies have to adjust, right? And if prices just have to stay higher, or if, like CPI, well, I shouldn't say like CPI, as opposed to CPI, maybe there is a softening and they don't. So I think it's kind of either confirmation, or it can give the bull some hope, like, okay, down the road, there will be a softening. Companies don't have to keep adjusting on price upwards. And maybe it was more of one-time events like rent, housing, and government jobs. And we will see a softening next time. Because it's about narrative as much as it is, like, we're a market that keeps pricing in 6 months ahead, right? Which means we're not pricing on fact, we're pricing on narrative and hope. So if you're pricing on narrative and hope, to have hope, all you need are some pointers to say, hey, you can hope on this. So PPI can give the bulls hope, like, hey, CPI says one thing, but there's some indications that we will eventually slow down, and next CPI is better. I hope I said that so it makes sense, but that's how I look at it. Or give competition, we're screwed, and inflation is staying higher for longer, and bulls have to really simmer down.
PPI can sometimes have like a much more muted response compared to CPI, but do you think because of this week's CPI number being so hot, more people are focused on Friday's number?
Yeah, undoubtedly. I'm not an economist. I don't pretend to be, but the smartest people I know now say, it becomes much more relevant. If there's some further insight, it's going to come via PPI, especially basically in simple English, how much importance, like we even have a Fed governor today said market overreacted, right? Goolsby or someone said it. I think we're going to find out how much the market reacted correctly or overreacted via the PPI. So that's kind of how I look at it.
All right, let's talk about what you've been doing this week. So we're going to start off going back to Monday, and then we'll kind of work through your week so far. So David had some really good success with puts on the Qs Monday. These were lotto puts, so they were same-day expiration puts. Here's a look at the chart of that trade. He entered around. You forgot about these.
Yes,
You've been doing so much.
I had puts for CPI. Sorry, I really forgot about this. But anyway, cool.
No, you're good. You're good. So, all right. So we'll remind David, and we'll tell everyone else. Also, anyone who's here with us live, if you're on Twitter, you're on YouTube, wherever you are, if you have questions, go ahead and submit them. We do have some questions, David, so we'll get to those later. Cool. So you entered this trade around 28 cents. You got out of 50% of it around 42 cents. And you were flat by around the dollar mark. It's a 361% gain in an hour and 15 minutes for David. And of course, Inner Circle followed along with you on this. I was listening into the room on Monday when you were doing all of this, and these puts flew even after you got out. Yeah, you were talking about how, and you've talked a lot about how you're really great at entries. Sometimes you get out too early. So looking at this trade, looking back on this trade for yourself, what would you maybe have done differently to not get out too early?
Not think about Inner Circle and the percentage gains as much, and think about how I'd manage my money without other people kind of being influenced by it, and say, 20 puts, what's the most I can lose? A couple $1,000. Let's hang on because the trend is really down and things are really ugly. And quite frankly, it's just take the emotion out with giving away profits. When it's just me, I'm so much less conservative. So that sometimes becomes an issue. So probably trading my book and stocks the way they should be traded rather than protecting gains. Protecting gains is usually a mistake, right? You should buy and sell stocks based on if they should be bought and sold, not based on how much you're up or down. So that's how I would have done it.
It wasn't just the Qs that you were buying puts on Monday. You were also buying puts on SMCI and Nvidia as well. What was the signal for you in the market that something was happening in the semis? You needed to go onto the short side, and it was going to affect, the overall tech picture.
So I have learned that there are these moments where it's almost like a movie opening and people get so excited. And I have friends who've been around for 30 years and they start telling me about all the call buying and there's new strikes happening and everyone gets so jacked up. And then you start to see nutty things happen, like some rinky-dink company no one's ever heard of, BMR, which I mentioned in our circle at 370, sign a deal that was an old deal, I think, that everyone knew about with Nvidia and go from 3 to 30. And then you see ARM go up 50%, right? It's not a $2 billion market cap company. So I look at things like ARM, BMR, and then look at the leaders, right, which are undoubtedly Nvidia and then SMCI underneath and think, wow, this is due a gut check. Now, I'm smart enough to know I'm not going to call the top, but at least an intraday gut check where there is some real fluff that can undo itself. So I said, generally 90% of the time when I have this gut check, this feeling, I'm right. Now it doesn't, I want to make it clear, I can't call the top, but I can at least say there's going to be a breather. So I told everyone, I know this sounds crazy, but I'm pretty sure Nvidia goes red and SMCI pulls back, to quote myself, at least 50 points. So I bought a significant amount of puts on both because at least I could really understand my risk rather than shorting 3,000 SMCI and just praying like I'm right. At least I know what I can lose. So I thought that was really the way to play it in that case. And yeah, I got lucky and it really worked out.
You were sharing your thoughts about BMR on Twitter, saying on Monday, if they don't do an offering in the next 24 hours, I would be shocked after everything that happened.
I'd naked down the road, but I thought I'd, for Twitter, say something like that. I was going to say something crazy because I was sure.
And you were right. Later in the day, you said my best call of the day was one you probably won't notice. BMR prices a secondary offering at $7. And yeah, at $15, I warned you that it was coming. So what is it about when you see this type of action happening in the market? How are you able to interpret it to make these types of predictions?
Yeah, because I've been on the buy side, right, and the sell side, and structured deals and done a lot of corporate finance. So you get a general understanding of where a company is financially, what they might do if a stock price moves several hundreds or thousands of percent. And, the market's not like, let's say, a accommodating vehicle, right? So your stock, especially for small kind of caps that are story stocks. So when there's a chance to raise capital for a company that is not profitable, that has a lot of debt, and their stock goes up 1,000%, it's really quite likely they're going to go out and raise that capital unless they are run by an idiot. And there are CEOs that are great. So in my case, it wasn't a hard call to make. I was like, okay, if they are diligent, they have a shelf filed so they can raise capital like that. And so having some of that background helps.
I was going to say, you do have a very unique background compared to a lot of traders because of your experience in the venture capital space. How do you think that makes you different or gives you a better edge compared to some other traders?
The best way I can say it is when to drink the Kool-Aid and when to put it down and say, I'm willing to miss some upside. And how I handled SPACs, I was proud of. I explained to a lot of people. So there's a point where if you want to play in the deep end of the pool where, all the fluff is in the retail and stocks are going up hundreds of thousands of percent and you can afford risk, I'm all for it. But there has a point where you're like, I'm getting off the bus. Let the kids have their fun. I'm willing to miss money because this is going to get ugly. So I think knowing how toxic SPACs were and certain deals enables me to say, okay, like I played, but I'm stepping off this train because it's going to hit a mountain and be a fiery crash. So it enables me to not get too crazy, drink too much Kool-Aid, and get hurt.
All right. So those Q puts, the Nvidia puts, the SMCI puts, it wasn't just a great day for David. It was, of course, a great day for Inner Circle, those who trade with him in the room. So here's just a look at the chat from the day. People, of course, giving you thanks for those calls throughout the day. And it's been a theme for you all throughout this week, the short side of the semis. So today, it was another great day with Nvidia puts this morning. Here's a look at the chat from the Inner Circle as well. Some saying, trying to be patient with Nvidia, great call on those. Nvidia was a sick call, DP. Mention was perfect timing. So what did you see in Nvidia today that said, let's buy more puts on this stock?
So the ranges have gotten wider, right? We're at like trading moment. We haven't seen a moment like this in a while where we get these wild ranges. And within those ranges, you don't even have to be good, right? You just have to understand the size of the range and not to be in too early on either side. And I'm also a big believer that when you see a crack in something like Nvidia and it's later in the story, meaning we all know this is not early anymore, right in front of an earnings report, you just kind of start to do math, right? So my math was, hey, you're an institution with a sizable position. The stock's up far over 50% in just a couple of months. Are you, and everyone thinks it's going to be down after earnings. I mean, even the best analysts on the street, right? The great earnings, it'll be down. So do the institutions wait and do the selling when it goes down? Like, what do you think? I mean, being serious, like, no, right? They're going to do some selling now into strength. That's how smart money sells, right? They don't wait for a turn like traders and force. They have too much stock to sell. So I thought, okay, you have that combined with fluff. Yet again, SMCI is, and remember, I was very bullish SMCI under 400, but we're seeing well above 800 now. You have some of that fluff. We have CPI yesterday, which I explained to people, it's good for big cap in a way because it makes it less stocks more attractive, and that's big cap. But overall, we have a tough economic backdrop. We have some fluff. We have an earnings report next week, and people already got a hint of the risk. The risk was 698 just yesterday. So I said, if anything can pull back, it can be an Nvidia. Now, do I want to just short a few thousand shares again and pray? No. But what a great time to know my max risk, buy some puts at $2, I think $2, yeah. And if I'm right, which I'm pretty confident I am, but these things are crazy. I can't say I'm going to be right. What a great way to play it. So yeah, it wasn't right away. I think they went as low as $1 and then they went as high as 4s. It looks like they'll go above the highs of the day the way it's trading right now. So it was just understanding that whole potpourri of information. And then I finally want to say one thing, because we're on opposite sides. And he's one of the brightest guys on CNBC. He's crazy and he's not right a lot, but he's bright as can be. Cramer is going to affect stocks. So whether you like him or not, he can have an effect. And he really, for once, was very logical this morning on maybe it's time to take a rest. So I took all that information for me and said, it increases my odds that I'm right and it reverses today. And that's why I do.
All right. Speaking of earnings, Nvidia's earnings, as you mentioned, are next week. It's next Wednesday, I think. Yeah, after the market closed. So what are your expectations heading into that earnings report? The stock has seen such a huge run up, but then, of course, a pullback now. What is it going to take from Nvidia to continue this rally?
I mean, I don't think it can go up. I think they're going to say they actually have supply constraints, that business is so strong they can't meet demand. And I think they'll beat estimates, and I think they will raise guidance. And I think if the stock's up, it'll go down. I think if it goes down too much, there'll be buyers right away. My thought is that it'll probably not get crushed or anything, but start a round of profit taking and build a new higher base. And I wouldn't be shocked if it's somewhere between 650 and 700. I could be wrong, but I wouldn't be shocked if it's that, because it's simply law of large numbers at some point. And now real money, not me and traders and small funds, but real money has to say, okay, so I'm looking out 2-3 years. Can they still do that growth? And there's nothing they can say on the call that's going to convince them that 2 or 3 years out it can do that. So it's just going to need a rest, in my opinion. And I don't think there's much they can say, except for like he's going to, give signed leather jackets that he wears to everyone, and then maybe we'll all buy the stock and hold it. But it's going to be tough.
Yeah. All right. Speaking of earnings, a focus for you since last week was ENPH. It's a solar stock. They reported earnings and then rallied. One of your one thing you said last week was to pay close attention when stocks go up on bad news, which is what happened with ENPH. So you got long this stock after earnings. This is last week, so reminder for David and reminder for everyone. But you got long this stock on the 7th last week, and your target for your long was 132, which was hit Monday. So you came into this week, right? Still long about half of the
stock and calls. Yeah.
Okay. So just talk about what you saw in ENPH after earnings, what made you say, yes, this is a viable long for me, and how you managed it and then held it through the weekend into Monday.
Okay. Saw 4 or 5 things. The first thing I saw is one of the premier stocks in one of the most ugly sectors that got decimated all of 23, showing me signs that a bottom might be in. And when a bottom's in for a stock that's off 70 or 80%, it can often go up 40% and still be crushed from all-time highs. I then saw price action. I'm not really a pure trader, but traders just say price matters and that's all they pay attention to. Well, if it does, right, and you have a company that reports a poor quarter, gives guidance, forward guidance of a poor quarter, but within that guidance explains they see a bottom and the stock reacts not by going up 3 points, but by closing up 15%, you basically are being told you must own the stock because they're guiding lower, they're missing this quarter, and the stock is up 15%. There is no greater short-term signal than strength on bad news or weakness on what's considered unbelievable news. So price action said we must own it. And then it basically is a perfect proxy for small cap and IWM. I thought, do I want to chase IWM here? I kind of missed buying it down in the low 190s this week. So how can I be in it? Well, I have Biotech, which kind of mirrors it, but how can I be more in it? Well, the way I can be in it and still make money and maybe have less risk because the price action is so strong is a solar stock, which are so rate dependent, much like small caps, because people need lower rates to buy this product for their homes and so on. This is the perfect way to play. So I put that picture together. I looked at where it was. I looked at where it went during its January effect in December, and then finally looked at the 200-day, which was up at 132, and said, I'm going to be long stock and calls. And obviously it worked out. And that was that.
All right, great. Let's get an update on Immunome. This is a stock you, of course, have been talking about since December. We talk about pretty much weekly here. You sent out a tweet yesterday saying, IMNM, I've been rather loud about a possible offering. This should be a wonderful opportunity for those that missed the incredible run. Reminder for everyone, David, you've been long in this stock since around the $6 mark? Right?
Yeah, many
6, 7, 8, that area.
4
right.
or 5, yeah, but yeah.
Right. So a lot of the conversation lately has been that, there's not technically a buy spot here because the stock has ran so far at this point. How does this change the picture for those looking to get into Immunome?
Sure. So I warned people, I said, I know nothing, right? But I do know that a company that is basically taking millions of dollars and every time they make an acquisition is actually taking, say, a $20 million acquisition, but in the stock market, its stock is actually gaining hundreds of millions of dollars in market cap. It's almost like an arbitrage. because Clay is so successful that when he does make an acquisition of a bio product or possibility, right, or a marker, the market's immediately giving him far more credit than they would your average CEO. So the stock goes up, right? He spends money and the stock goes up. So if he's been doing that and it's working and it's gone from 6 to 26, then he's an idiot if he doesn't raise capital, like an absolute schmuck. Now, since he backed and founded Seagen and it got sold for 40 billion or whatever the hell it was, my bet was he's not an idiot and he'll raise capital. So be ready, because when he does and it dips, that'll be our opportunity. 20 big round hold numbers seemed like a logical spot, still hundreds of percent away from where it was recently, down at 6. So I said, be ready. This is a fellow who has taken some of the biggest institutions in the world on a wonderful ride and made them literally billions of dollars. So I'm going to guess, I don't know anything again, but those same institutions probably want to give money to him, because I know I'm not very smart. So if I find a jockey like Clay to follow, I follow, right? I'm sure other people do the same in institutions. So I knew they'd be there, in my opinion, and be there quite strong, and it would be an opportunity. So this morning, needless to say, we were very aggressively buying the stock. When we saw 20 pre-market, it traded 19 for a second. And yeah, it's okay now, up almost 23 bucks.
Great. All right. For everyone who's still with us here live, we have questions coming in, but go ahead and submit those. We're getting to
after this, answer a few only so we can
we're getting to the end of these topics, so then we'll go into the questions. While we're on biotech, though, Immunome is of course a biotech company. You still like the sector overall. You said in a tweet over the weekend, XBI a focus for Inner Circle since below 70, 95 and 101 are your upside targets. And on Monday, you tweeted XBI plus 1.6% on her way. You came into 2024 bullish on the biotech sector. Is that still your stance, and why?
I am 1,000% bullish. My stance is because there are some big biotech healthcare companies where growth is slowing, and they really need to find it, like we saw with this recent Pfizer acquisition of Seagen. And it's a constant theme, right? And the way they're doing that is through acquisition and mergers, kind of like we're seeing with Immunome. These companies have a lot of capital. Don't forget, people were borrowing money at 1 and 2, like free money out there, right? I think Apple once raised billions of dollars at under 1%. So a lot of the big guys have the capital, and they can really buy some incredible assets. And we're finally starting to see acquisitions and mergers pick up. Then you look at just the simple underperformance of 3 years, and I think it could still do great. However, IBB, which is more bid cap versus XBI, you still are rate dependent. So example, I'm still long, and my most recent purchases were 87s, right? Yesterday, when it was weak on CPI, I didn't buy anymore. Today, it's 2.5% higher. I wish I had. But my point is, I'm hesitant to get too aggressive unless we have a further pullback or, right, macro conditions change, meaning we actually have a hint that rate cuts come sooner because the economy is less hot than we think, because it's still somewhat rate dependent. I think it's separating from small caps and IWM, but it can't totally separate. It still really needs macro conditions to calm down a bit. So really bullish, longer term, short term. I own it much lower. I mean, we started this thing under 70. So I'm only a buyer of pullbacks. I don't mean to be too granular, but I wouldn't go out and say I'm buying it today up 2.5%.
Yeah, totally. All right, let's go to some questions. Our first comes from Elad, and they asked, 6 weeks into the year, what sectors look best to you after some earnings, some Fed data, inflation data, and the like? I assume biotechs, but what else are you looking at?
So longer term biotech, and I've never been a big solar fan, but it just seems like such a perfect longer term play, so rate dependent. So First Solar, ENPH, if you see weakness, a huge fan of those guys. And then financials, if you look at price action, they've moved. But if you look at PE, right, and where they are, they're actually still pretty cheap. And Citigroup just feels like, after 20 years of going nowhere, to me, that feels like the one. So less so, I'd say biotech, solar, tech. I mean, I'm sorry, but I'm not saying I'm bearish. I'll buy them all the time, but you can't as a whole say, I'm buying big cap tech here. I mean, it's already moved a lot. And you can't just, with a broad stroke, buy mid cap tech. My point is like Block. We need to have really good numbers. PayPal's a mess. I'm just throwing out all these mid cap type of names. And then Shopify yesterday, one of my favorite companies, but carries a really high valuation. Numbers weren't good enough. So there are not a lot of sectors I'm uber bullish on. I always tell people there's amazing trading opportunities here. But if you are an investor and you didn't buy Qs at 260 or 300 or 350 or the SMH or SOX, and you're looking to invest now, unless you're looking out 10 years, you might have missed it. You might want to wait to pull back. So sectors with meat on the bone are ones that still have hair on it because they're rate dependent. So I like solar, financials a bit, and definitely biotech.
All right, great. Eric from Twitter wants to know.
One thing. I think alpha comes from stocks, not indices right now. That's where I think you make money. Individual stocks, right? A market of stocks, not stock market. I think that applies now more than ever. Sorry to interrupt.
Oh, no, you're good. A follow-up actually on this question from Elon. They asked, what's your point of view then on crypto based on biotech, solar, and banking?
I thought we pulled back a bit more after yesterday's number because it's some hot money, but overall, I think that we're going to new highs. I mean, I see zero reason why we won't. I don't know if it's in 3 months or 6 months, whether it be the charts look great, whether it's that, BTC is over 50,000, whether it be that, longer term, we think rates will come in and it brings, new hot money into the space, whether it's the ETFs. I see zero reason to not be bullish on crypto. Granted, I'm not a chase guy. I'm not like, oh, up 10%. I want the next 10%. But overall, I mean, I'm old and I'm slow. So BTC is good enough for me. Sometimes I look at ETH, but beyond that, I don't look at the altcoins. So I'm bullish. And I think it may not make sense to me, but I always say, I've said it on other calls with you, enough people recognize it and respect it. It's a real asset. And I don't think it's close to its highs. I mean, it's going to make new highs eventually.
All right. Eric from Twitter wants to know what, if this will work, what you think about Netflix and AMD.
To quote me yesterday, I said Netflix is one of the better charts in the market. Solid earnings report, as we know, had a nice little pullback and had this wonderful tight pattern, just bending a little bit, but not breaking under the 8 and 10 day, but didn't look like it'd make it for the 21 day. And to literally quote myself, I said, any day, I expect there to be this wonderful green candle like that. Like just today, there was a third-party data point that often come out. Some of these research firms really move stocks now because they get into the details, and the stock exploded. So would I buy it? Last I saw it was up like 15. Where is it now? I got to get this camera off. It's up 18. I think you missed it, but I understand why it's doing well, and I was very bullish the chart yesterday. I just got so busy with so many things, I missed owning it. But really looked good to me yesterday, and I was a big fan. What was the other one?
AMD.
AMD. I think AMD is riding the back of SMCI and Nvidia. I got it. Everyone sees the chart. It looks really good. But the minute these guys pull back, that's the redheaded stepchild that's going to pull back too. Now, all that said, if this fluff continues for another few months, eventually it'll get through. But after lowering guidance, I get it. AI chip, they up guidance by almost 70%. But we do that, right? That's why the stock went from 95 to 180. So it wasn't enough, and they actually lowered guidance overall. So basically, when you buy AMD, you are buying SMCI going up another 50, because the minute SMCI and Nvidia come down, the one that comes down most as a percentage will probably be AMD. And then one day when it corrects enough, right, you can look and say, can they even garner 10 or 15% of Nvidia's market share? And if you believe that, after it's reset itself and people can look out a year, then at 150 or 60, you could probably more likely say, okay, there's some room here a year out to make real money. I just think for right now, it's riding other stocks back. And the minute they turn down, it's going to get hit. Earnings were obviously less superior there.
All right. Saud wants to know if you think that Eli Lilly has more room to run.
Yes, not cheap. Can't say you're early in a breakout. All that said, I think we're, America's food obsessed and weight obsessed, right? And I mean, it's a game changer. And I think their market will just double and triple and quadruple. I wouldn't be shocked if 70% of the population are on these drugs. So I can't tell you it's cheap, right? We're used to buying this stock for under 20 times and it's nowhere near that anymore. But I think something like this can just continue on and on and on. So if I'm you, I'd look at the chart, find the level that you're comfortable with, and the minute it pulls back, you want to be a buyer, in my opinion, because the best companies don't make it easy. They don't get cheap. And everyone and their mother knows they own this market. Yeah, they're competitors, but right now they're just killing it. So one day when it pulls back, you want to be a buyer. And by the way, it's gone so far, it might be a little bit like an Nvidia, where one of these days it just gets tired and sits there for a while. It did it recently under 700, right? And people wondered if it was over. And all the buyers, just like Nvidia buyers under 500, are now happy. I think you'll have that again. So you got to kind of wait for that moment where it's less exciting and not going up every day.
All right, David, as we wrap things up here, let's end with a little bit of advice from David. So those who follow you on Twitter, at Epic Trades One, if you don't follow him, go ahead and follow him now. You send out a lot of tweets that are full of great advice for novice traders, full of great advice for experienced traders, what you've learned over the years, etc. This one stood out to me over the weekend. You said, trading for nearly 30 years, first 10 years, I endured pain on too many occasions as I was right and logical. The last 10 to 20 years, I almost never think that way. Who cares about logic? Definitely not the stock market. And I would agree. Stock market definitely is not logical in any way whatsoever. So just your thoughts on this. Expand a little bit more on this tweet.
So we're about to experience, right? And we already are. In the next month, there are going to be people that lose everything and people that change their lives overnight. And I thought, what a good time to say this when people are trying to figure out, like, SMCI, there's no way it can go up another 100, 200 points. And, they're worth a couple $1 million to their name and they're shorting 4,000 shares and it goes up another 200. We like markets when they get through these moments, right, where we find a theme and the theme takes over and the theme actually has meat on the bone, is making companies like SMCI and Nvidia money. We never know the top. So I always like to remind people, don't think that because a stock's gone up too much, it means it has to come in, because people lose their lives that way. And by the way, the same way, if you think it's never going to stop, and you're seeing these new options and you're seeing option activity and you're so excited. I've seen guys who literally refuse to sell. I had a buddy during the internet days, dearest friend, right? This guy was awesome. He was working at Citibank, started his own company. Langone backed him. Overnight, he was like, this is 99, 98. Anyway, it was early 90s. On paper, he owned this company, Interworld. We had a ball with it. He was one of my best friends. He came to all my nightclubs when I was a kid. Anyway, so overnight he's worth $400 or $500 million, and he drank the Kool-Aid. And this is the biggest thing in the world. And then the internet blew up. He had exercised options on his stock, right? He never sold any stock, so he had tax consequences. He believed in it so much, then he owed the government money, and within a year he's bankrupt. So, remember to sell, remember to take profits. And if you're shorting, don't think you're going to get the top, because none of this is logical anymore. It becomes totally emotion, and emotions are things we can't quantify. So they can go up further than we think, and they can go down further than we think. So I thought, what a good time to remind people that.
All right. For all of those who are with us here and interested in possibly trading alongside David, our offer for you today is to go to t3live.com/DP and submit your application. Now, in our circle is a a special room at T3 Live for larger traders, those with $100,000 plus accounts. And David is the one who decides if you're a fit for the room.
Can I say one thing? Because it's not like a fancy thing, like if you fit. It's just if you're someone that has like a $20,000 account and you're buying lotto options or 0DTE, like we're not the right place for you. So that's why we like to just make sure it fits for you and us, right?
Right. It's you don't want to get in there and be too big for your britches,
right?
And burying yourself in the market. But again, for those who are interested, think that you are the right fit and you want to work more with David, go to t3live.com/DP to apply. David, thanks so much for doing this today. We'll be back next Tuesday, Monday again, everyone, or Monday for everyone. Just a reminder, is a holiday. The market is closed, so it'll be a Monday on Tuesday. David, get back to trading. Hope you have a great rest of your day. And everyone else, thanks for joining us.
Thanks for joining.